How do you eat a Bitcoin? With a megabyte? For those new to crypto, you cannot eat them, and if you could, I would definitely not recommend it. Whether you are brand new to Bitcoin or you've been here for a while, there's always new lessons to learn, and most people who come into the fast-paced world of cryptocurrency feel like their head is swimming in a vast sea of unknowns and complicated concepts. But today, we are going to show you why Bitcoin will eventually hit the $100,000 per coin mark. We make crypto analysis, and if you like money in crypto, then make sure to hit that subscribe button. Now, let's start with this. What is Bitcoin? But where we talk about investing in Bitcoin, we have to understand what Bitcoin is. Most people will definitely say that Bitcoin is a digital currency. That's what almost everyone says, but it shouldn't be categorized as a currency. Same way that gold is not a currency. Now, you could go into a car dealership with a few gold bars and maybe trade it for a ride, but it ain't going to be the dealership's first choice. Although it would make a really cool YouTube video. We should do it. We would most likely find some real gold diggers. The dealership wants currency, not an asset. Bitcoin is a digital asset. Think of it like a stock, a bond, gold, oil shares, etc., but it's a special kind of asset called a store of value. You can take money, put it into Bitcoin, and hypothetically, it should maintain a level of value. The volatility of Bitcoin, which we'll talk about later, can make this a tricky proposition because I'm sure, as you've heard, the price goes way up and way down. Kinda like a roller coaster. Usually, store of value assets don't move like this. But let's talk about how Bitcoin was created. In 2008, an anonymous person dubbed Satoshi Nakamoto showed in a forum what we know now as the Bitcoin white paper. Basically, that's a fancy way to say a guy wrote a paper describing a new currency he wanted to create. The title was Bitcoin, a peer-to-peer electronic cash system. The original intention of Bitcoin was to be a currency. We could all send directly to each other without the need of a third party like a bank or a credit card processor. Hasta la vista, Visa and MasterCard. This would be a decentralized currency ran on something called blockchain technology. No one party or entity could have access to make changes to the network, meaning it would be extremely secure and private. That is why it was widely used on the black market and on the deep web for the initial years. I mean, you could buy some very bad stuff, or maybe just buy some magic candies, whatever you're into. You could even buy a life-size Perry the Platypus with Bitcoin on the dark web. But it is no longer private. Some companies have discovered ways of tracking transactions in the dream of making electronic cash over. Mostly because of the value, the first guy ordering a physical product with Bitcoin spent 10,000 Bitcoins to buy 2 pizzas. That value is around $560 million as of writing this. Imagine what you could buy now with that kind of money. Point being, people realize today that Bitcoin works best when they hold it, not spend it. And that volatility is not likely to change anytime soon. This might be the best investment of the freaking century. I wish I could go back to the past just to get a few Bitcoins. Bitcoin has become the modern version of gold, digital gold as we call it, and it has a finite supply, which is definitely one of the reasons for Bitcoin's success. At the moment, there are only 18 million Bitcoins in circulation, and there will only be 21 million coins, and they won't all make it into the circulating supply until 2140. That's a few years away, so I hope they can freeze or find a way to make me immortal because I want to see that happen. So guys, just revive me when this is about to happen, or I will just come back from the gulag. New coins come into the supply through what we call Bitcoin mining. It's basically computers solving hard math problems in order to earn fractions of a Bitcoin. The fact is, we've never seen an asset in the history of mankind that was specially designed to be the optimum form of money on the planet. And while the value proposition of Bitcoin has changed from money to a store of value, the same thing rings true. This is the greatest asset we've ever seen in the history of the world. I mean, Doritos are also really good, but that is also finite and decreasing in count. Especially when I'm near them. That, and yet as the price is pretty high at $56,000 right now, we believe the price is going to be a minimum 6 figures by the end of this year. But of course, that's not financial advice, but I do believe there are still a long way to go from that. One thing though, you have to understand about Bitcoin is that it goes in cycles. So even if you buy it now and it goes down, as long as you don't sell it, a lost history has shown that it will continue climbing much higher. Just like we said before, up and down like a roller coaster. Honestly, I'm starting to believe that if companies, governments, and investment funds continue adopting Bitcoin, that in 10 to 20 years, we could be looking at $1 million Bitcoin. I know that sounds crazy, but it is completely possible with the finite number. Having the opportunity to own one Bitcoin could bring generation-changing wealth in the future. Only the truly elite will own one full Bitcoin. They will probably have a summer night party to discuss the future of the world, but Perry the Platypus will come running to save the day. Bitcoin plays out pretty much the same way every 4 years, though. It's based on something we call Bitcoin halving. This is where the amount of Bitcoin producer mining gets cut in half. In the beginning, there were 50 Bitcoin produced per block mine in 2012. It cut down to 25 EDC that in 2016 to 12.5 Bitcoin. Then, most recently on May 11th, 2020, the Bitcoin halving dropped the amount to 6.25 Bitcoin per block. That equals about 900 Bitcoin per day currently produced. Basically, every 4 years, there are half of the Bitcoin produced in the year before. In 2024, that will be cut to about 450 Bitcoin per day. And for the Bitcoin cycle in 2136 to 2140, there will only be one half of one Bitcoin produced total. Whew, baby, when that happens, not even the gods can buy that Bitcoin. It will probably be at the millions per coin. So, the supply and demand principles of the Bitcoin halvings scheduled every 210,000 blocks means the value proposition of Bitcoin should continue to increase following those halving events. But there's a small catch about a year and a half after the halving, when Bitcoin investing is at its peak, the supply shock of the halving wears off, and the price starts dropping. The retail frenzy ends, people start selling off their Bitcoin, plummeting the price. That is when you can get pennies on the dollar. Of course, we haven't had that much history, but this is what has happened over the last halving events. I usually call them the having a chance to get rich event because the average price drop is around 85 to 87%. But this cycle will probably be different because of the companies like Tesla and PayPal. These companies have bought tons of Bitcoin and will not sell it in their bear market. So it could be a less volatile drop, maybe 60% instead of 87%. Either way, I will be buying up while eating my Doritos and getting ready for my new crypto bot Lamborghini. Although these companies and institutions make you feel like they are going to buy everything up and basically rule the market, they also give us stability. Of course, with less risk also comes less reward. But that is where Bitcoin is going. If you want crazy risk and possible crazy life-changing money, you should look at other cryptocurrencies such as Ethereum, channeling Cardano, XRP, Bitcoin Cash, or others. These are what we call altcoins, or any coin other than Bitcoin, to be totally honest. They offer much more reward than Bitcoin, but they also boast much more risk than Bitcoin. Bitcoin's value is not 100% because of itself. For example, in 2020, due to the pandemic, a financial crisis struck, and guess what? The US Federal Reserve started printing money like they were hotcakes. Or crunchy Doritos. At the same time the Federal Reserve was printing money and devaluing the dollar, Bitcoin was getting harder and harder to mine. So, two things happened. Bitcoin, in of itself, if demand stays the same, the value goes up. The US dollar, if demand stays the same, the value will fall, because there are more dollars being created. Get what I mean? It's like me eating 3 Doritos a minute, and if there are more than 3 Doritos made a minute, the value will go down. But if there are made less than 3 Doritos a minute, the value of each Dorito will increase. I'm hungry. And the Dorito factory is like the US Federal Reserve. Or it's like the Bitcoin algorithm making it harder to create Bitcoin. With Bitcoin, it is problematic. No one can change the Bitcoin output. And as with the feds, like 12 people get to decide what millions and millions of people do with their money. And that doesn't really conform with the younger generation, like millennials and Gen Z. Because we really want to take matters into our own hands. And a decentralized solution to money is the best thing that could happen. Not to the governments, but let them cry. Governments will eventually make their currency digital. That will be the future. A huge percentage of payments and transactions happening today are already digital. The competition will be on the monetary policy level. Every country is going to do this right. They're already talking about it at the central bank level, so we're going to see a digital dollar, a digital yen, a digital euro. Every currency will be digital. Let's create our own currency and call it Dorito Happy. Because when you eat Doritos, you become happier and you will be able to buy Doritos using a Dorito coin. Oh, this is just genius, I know. Bitcoin has proven to be one of the best, if not the best investments of the decade, and will possibly become the best investment of the century. Long-term Bitcoin will be one of the most valuable assets and arguably the best store of value asset as well. The supply side of Bitcoin is certain. The hard thing is the demand, but some really smart people have tracked it with stock-to-flow ratio, and they notice that it gets more and more accurate over time. And guess what? They have predicted that Bitcoin will hit $100,000 by the end of 2021. Of course, people should invest only in what they understand and money they are willing to lose. But I really hope this video has gotten you a little bit closer to understanding why Bitcoin will hit at least $100,000 price tag. Let me know if you think Bitcoin will hit 100K this year or in a few years, or if it's going to hit it at all. Thank you so much for watching. Leave a like and smash that subscribe button. See ya.